Hi, this is Bill Miller with StartRealEstateWealth.com, and now we're into part 5 of this tax liens investing video series. Although for the most part tax liens investing is a very secure way to invest your money, there are also some pitfalls to be aware of. So we're going to address some of these in this video so that you're aware of them and also try to avoid them. So here we go. So we'll start with pitfall number 1, which is lack of due diligence. The biggest of the tax lien investing pitfalls is not doing your due diligence before purchasing a tax lien certificate. It's very important to know what you're investing in, and it's easy to get caught up with not doing your research if you're purchasing a tax lien from another state, perhaps either by mail or online. But keep in mind that the tax lien certificate is a lien against a real piece of property. So what does this mean to you? Well, you want to make sure that the property has value so that if you end up acquiring the property after the redemption period, you'll be able to sell it for a handsome profit. If the property is worthless, then yes, there's a good chance that you'll acquire the property, but will it be worth it? If it's not marketable, then certainly not. So on to pitfall number 2, which is basically a subset of pitfall number 1, neglecting details of the property. So be on the lookout for any environmental issues with the property, such as lead paint, contamination, asbestos, and things like that. And also no water access, that's not good either. Neither is landlocked properties in which you can't get onto the property. And also properties that are out in the middle of nowhere, that's just not a marketable property. Also make sure that you do a thorough research of the title of the property. Make absolute certain that there aren't any other liens that will work against you if you acquire the property, causing a liability to you if you pay off those liens. Make sure that the title is clean so that you're able to sell the property. Also, not all states treat tax liens the same way. Tax liens are good investments in some states, but they're not good in other states. So make sure that if your goal is to get a good return on investment, which I would presume would be anybody's goal, then pick those states that will give you just that. Make sure to study the bidding process of the particular states that you're interested in, making sure that the investors can't bid the interest rate down to 0%, as they can do in New Jersey, for example. And also study what the redemption period durations are and the expiration periods for the certificates. And if there are premiums that you have to buy when you purchase these certificates. And of course what premiums are is anything above the bidding amount that you would have to pay that you won't get back. So next time we're going to cover the remaining pitfalls, and I have actually 3 more to cover. So keep in mind that this is not necessarily an all-inclusive list, but it actually does cover most of the main pitfalls that you're going to run into. So with that said, head on over to the next video at the link below, and I'll see you there.